Welcome to the Business Management Plan proposal for B&RR Group LLC. We are Team 8 of the Advanced Business Policy Capstone class, part of the MBA program at Texas A&M University, San Antonio. Our team is made up of
Alejandra Hune,
Catherine Leeper,
Nicole Salinas,
Alfred Salazar Jr.,
Teodoro J. Boggio.
B&RR Group LLC is in the rental housing industry. This industry boasts revenue figures of $162 billion per year with an annual growth rate of 5%. The main economic drivers are housing sales market trends, interest rates, the local unemployment level, rental vacancy rates, and the city population level. The median home price in San Antonio was a record high of $219,866 in 2017. Interest rates are still low, but the Federal Reserve is planning on increasing them. The local unemployment rate is 3.8%, which is lower than the national rate, balancing out demand created from higher interest rates for rental housing. A low rental vacancy rate of 7% shows that supply is tight and may continue to remain low as the population is expected to continue growing. A social indicator is income, which is an average of $64,636 in San Antonio. Political and governmental factors include the Tax Cuts and Jobs Act of 2017, which will increase deductions for the general population and allow rental property owners to deduct the full amount of property tax. Lastly, technological advancements such as chatbots like Amazon's Alexa have the potential to revolutionize how property owners connect with their tenants.
Understanding the business's internal environment is a fundamental step in developing and maintaining competitive advantage. Assessment of the internal environment addresses the 6 major functional areas of the business. For B&RR Group, these areas can be described as follows. Management. B&RR Group strives to provide safe and reliable housing options to low to middle income San Antonio citizens. Human resources. This component involves the contracting of renovations and maintenance personnel to service real estate properties. Marketing. Activities here include identifying and soliciting business from potential home renters through online social media channels, mainly Facebook and Craigslist. Operations and productions activities for B&RR Group involve acquiring, renovating, and renting new and existing residential properties. The accounting and finance component includes payment of mortgage loan obligations and filing all appropriate tax documents. Information systems includes the use of Apple numbers to record all important financial information and the COSI application to vet potential new tenants.
a SWOT analysis looks at the strengths, weaknesses, opportunities, and threats as related to a company. Strengths and weaknesses look at internal factors, and opportunities and threats look at external factors. Looking at the SWOT analysis of the B&RR Group, we see that their strengths are real estate agent, renovation team, maintenance personnel, COSI software, operating in high-demand areas, and salaried jobs. Their weaknesses are limited cash balance, advertising, inexperience, difficulty in obtaining low-cost financing, and time constraints. Their opportunities are San Antonio population growth, refinance higher rate mortgages, pursuit of realtor's license, relationships with another investor, and increased rental prices. Threats are competitors with more cash on hand, increasing interest rates, potential market volatility, preference in owning versus renting, and tenant default. A value chain describes a company's full range of activities that bring a production or service from a conception stage onto production stage and then onto consumer stage. A value chain is made up of 5 primary activities and 4 secondary activities. Seen here, we see the value chain of the B&RR Group, which are primary activities include inbound logistics, acquisition of homes in San Antonio area, operations, flipping and renovation, outbound logistics, renting rooms and homes, marketing and sales, signs and social media, service, provide affordable and well overseen homes. Their secondary activities include infrastructure, owner, co-owner firm, human resources, hiring and employee management overseen by owner and co-owner, technology, which is social media, tools, and renovation methods, and procurement, which is the purchase of homes through door knocking and for sale signs.
The Porter's Five Forces model is a common tool used to analyze a business's competitive environment. The 5 factors included in this analysis are the rivalry among competitors, threat of new entrants, threat of substitutes, bargaining power of suppliers, and bargaining power of consumers. As it pertains to the current housing market in San Antonio, the market is highly competitive due to low barriers of entry and high bargaining power of suppliers.
After establishing an analysis of the situation for B and RR Group, a strategy for the short run and another for the long run was proposed. For each projected year, the rent is expected to increase by 10%. During the first year, the rate on the Baylor property is supposed to decrease from 9.9% to 4.7%. At the end of the projected 3-year period, B and RR Group should have acquired 4 additional properties, total, each with expected estimated values of $64,000. In the long run, the proposed activities would contribute to the long-term development of the firm and its capital. In turn, net income is expected to increase with additional rent payments from both existing and future acquired property tenants. Along with increased expenses, utilities are expected to remain constant, with insurance costs leveling out by 2020. Net income would start in 2018 with a lower percentage of total revenue, eventually increasing.
In the balance sheet, assets are balanced with the sum of liabilities and owner's equity. Assets for the client's base year are comprised of the 4 existing properties referenced by their street names of Colima, Baylor, Castle Hunt, and Midcrown. Liabilities for the base year are comprised of the debt owed for 3 of the properties, and the equity is made up of the capital of the properties, including Colima, which is owned outright. Changes to year 1 include the payoff of the Midcrown property and the recommended acquisition of an additional property. Changes to year 2 include the expected payoff of the Castle Hunt property and the recommended acquisition of another property. Changes to year 3 include the acquisition of an additional 2 properties. The balance sheet figures are expected to go from $310,169 in 2017 to $678,527 by the end of 2020. The number of properties is expected to double.
The statement of cash flows is important because it allows a company to learn about the sources and uses of cash. In our calculations, we leverage information from the pro forma income statement and balance sheet to project cash balances at the end of each of the next 3 years. In this analysis, we assume a personal contribution of $5,000 per additional property.